All right, traders, I am back again with another video. And in this video, I want to take the time to show you a trade that we just completed. Completed this trade this morning, and now the trade has moved the opposite way after we have already taken profit. So I'm going to show you this Aussie Swiss franc. We basically just traded a support and resistance trade. This is the daily time frame, and you could see it was on the this range here. So first of all, you have to really see if you have to know you're in a range, for one thing, and probably this is more a lot of newer traders. You really want to understand the market structure, and then that way you won't get into a trade that's bad for you, because sometimes traders will be trading right into the resistance point. All right, so they'll be taking a trade at this level, and a lot of new traders may see this candle here breaking up to this level and jump in there, but they don't realize the market is right at resistance, and more than likely it's not going to go through that level, and then it just drops to the downside. If you're going to take a trade, you need to know where these support and resistance levels are. That's a major thing. So you should try to learn and understand the market structure and support and resistance. You can trade the markets all day long with just support and resistance and price action if you really learn it and understand it very well. All right, but what I want to do is take you back in time. We're going to go through a time capsule, and I'm going to show you where we started this trade and how we decided to get in. So let's look at this from the past and figure out what we did so we could see where we are in the future. All right, so we're going to go back. We're going to look at a couple things here I want to just show you, but first of all, I have the OBV on my chart, and then I have the ultimate oscillator on my chart. Reason I have them both on my chart at this time, I'm getting ready to take one of them off, is because basically when we had our session, in our webinar session, a member asked me which indicator is best to use for the divergence. Was it the ultimate oscillator or was it the OBV? So I told him that I believe the best one to use was the bottom one, which is the ultimate oscillator. Okay, so and I do believe that still, but I'm going to switch and just leave the OBV on here. Now the OBV is very good. It catches most of the divergences just like ultimate oscillator, but you could see back here. All right, so let's mark this. You could see a divergence starting back here, and this was starting to go to the downside. Well, this divergence didn't start yet. It didn't start till here, but it went really strong. Okay, so we're looking at a trading opportunity based on a support and resistance and divergence. Now what we want to look at here is, let's go to let's stay here first. Looking at this here, you can see we're inside this box, which means we're ranging, right? So you can see with Ichimoku, everything is flat. Now this is a range, but I don't want to trade the daily candles because look how big they are. All right, and you might not catch much of the trade, you know, because our candle, suppose our candle closes down here as this one did. We're halfway in the zone, in the range already. So also Ichimoku is not helping us at all. All right, so when we go to the 4-hour time frame, we want to go down to that 4-hour time frame, and let's get rid of one of these. Let's get rid of one of these indicators. So you could see they both show pretty much the same divergence here, and I'm going to get rid of the ultimate oscillator. All right, so we'll let that one go. Let's remove it, and then we'll just use the OBV for now. So what we're looking at on the 4-hour time frame now is price has run into this resistance level here. Now I'm going to get rid of Ichimoku. I'm going to hide it because it doesn't help us at all, so it'll probably just be in the way. You can't see the price. So when we look at the chart here, guys, trading these levels, a lot of times I like to just trade resistance. I don't like to trade long because I don't like trade breakouts, okay, because a lot of times breakouts get trapped, and then you can see the bottom breakout here, the bottom support level here. So I'm going to show you what happens at these support and resistance levels, and basically these are bear traps and bull traps. So first of all, you had a bull trap here because all traders that are looking for this breakout level, for the market to break this level, as soon as they saw this market moving and before the candle ever closed, I'm sure a bunch of traders just jumped on the boat here. All right, And when they jumped on the boat here, the market shot back down and then closed lower, and then the next candle went even lower. All right, so that wasn't a classic bull trap, but that's a bull trap because you're getting trapped. Bulls are getting trapped long and the market's going back to the downside. That's because at resistance you should probably more than likely trade short. You should follow that. And then at support here you should basically trade long. Now there was a major rejection here that would have helped you to trade this support level, and then you had a second level. But breakout traders would have jumped on here, and then they would have been caught in a bear trap because the bears are looking to go short and they get caught in this trap, and then they're not able to get out, and then they lose their trade. But if you wait for this candles to close pretty much at support levels, you could see that you had a big rejection here and then another one. And then at rejections, you probably want to be trading at rejection to the upside, and you would have made some profit. Then you could see here, we attacked this level twice. This is what I don't like, coming back to that level twice, because eventually we're going to break out of this level. We're going to break this. So how often can we catch this trade on support and resistance? All right, because yes, eventually we are going to break the level. But what I'm going to look for is at this point I'm going to still do what support told me and what resistance told me prior. So the resistance level prior was being violated. It was not violated. So I'm not going to look for it to be violated at this point. So therefore I'm also showing a divergence. Okay. So I'm showing a bearish divergence in this 4-hour time frame. So if we look at that, we mark that divergence. You could see this level here, which would be pretty much right here. All right, so pretty much right on down here. And you might think I'm drunk because I can't draw straight, but nope, I am not drunk. And then we go to this level. Even if we look at this whole level, this whole area, because it's bouncing on this level, that's what's kind of scaring me, that it's bouncing up there so often. And you could see that's right at where we are now, so it would pretty much be this. And you could even see there's a small divergence here. There's a bearish divergence here, which we're kind of thinking if we have these divergences, we're looking for the market to drop. Now, trading the range, you quite naturally want to trade from the resistance back down to the support level, but if we take the trade, doesn't mean it's going to go that far. So I like to shoot for levels at least, and then try to see if the market can make those levels. So one of the levels that I'm going to look at getting in, I'm going to see if the market could come back to this level first, and if the market could break this level, then I'm going to see if I can make it to this level. All right, but I'm going to trade based off of watching the price action to see if it breaks and if it can break through this level and then go to the next level. So we'll close this out, and then we'll look at where our entry could be. So we have a nice indecision candle, right? So with that indecision, we want to trade this indecision. So we're going to trade at this level. Now a lot of times we're going to trade aggressive because there's two types of trading at these levels that we look at. One of them is aggressive and one is conservative. So with aggressive, we'll trade the level, all right, with a stop loss a little above that rejection, this indecision candle. So we're going to trade the indecision low level just a little bit below it, be a couple pips lower, and then we're going to use the indecision high as our stop loss, be a couple pips above it. A lot of times the market likes to come right back down to this level and then don't break it. So if the market decides to go higher, we shouldn't get triggered and we shouldn't lose the trade, and then we can start looking at a different type of trade, because we'll look at a different trade setup that will probably take effect after that. But if the market decides to come to this level and break, and we're now this, as I was saying, we're looking at aggressive and conservative style. So the aggressive style would trade this level. So as soon as the market drops and comes down, trigger right at that level. Then the next way would be to be conservative and wait for this candle to close. Maybe it closes down here, and then you take the trade. Well, what that does, it increases your risk. All right, because you have to risk more now. Your bigger stop loss. All right, so that increases your risk. So therefore, sometimes it's better to trade aggressive, depending on what kind of setup we have. All right, and especially on rejections, I really like to trade. Aggressive. on a rejection level. Now this is more of an indecision, but you have like a rejection tail up here. All right, but this is the level where we want to be getting into the market. All right, so a little bit below this point, which is the low here is 0.75478. So you want to be a little bit lower than that. Okay, so that's the trade setup. When if this takes effect, triggers you, then start looking to take, if the market could get down to this level. If we can continue going down, then we're going to shoot for the support level here. But when we looked at this trading opportunity, price hadn't reached up to this level here. So I'm going to go to the 4-hour time frame and show you. So currently you could see where price was sitting. So I'm going to go to the 4-hour. So price bounced on this upper resistance level a couple times. We'll go back to the daily real quick. So on the daily, that's what we paid most attention to. We saw that the market was sideways here, bounced on these levels a few times in the bottom level. So this 75,779 was a resistance level. So when the market got to that point, we went to the lower time frame to find the entry. So the lower time frame had showed some indecision and then just sitting here. And then finally we put our entry order here, and then the market dropped and broke it and triggered us into the trade. And then our target was this level here, but we wanted to make sure that because this was the level where we were thinking about, you know, the profit was gonna hit, and this would be a support level, and the market might retrace and then go back down to the downside. So there may still be some downside to this, but the thing that worries me is this right here. So you have this level, price came down to that level, right? But when you look at that level compared to where price is now, price should be breaking through here along with the volume. All right, but when you're seeing this lower volume dropping to the downside here, and the market's not breaking through here, well then it's kind of letting me know that we might not get through this point. All right, and we might retrace and then maybe go through, or just retrace and break through this range. So we're at the middle of the range, which is the other thing. So the market's finding support here. What I would do basically now is bring your stop loss down and put it at this point right here, and let the market, see if the market's going to give you a chance to continue to the downside. If not, you just take your profit right there and you're done with the trade. We go look for another one. But if it breaks through this level and your stop loss is here, then you broke through this support level, and now that's going to be resistance for you. You could keep your stop loss where it is, and then maybe the market will attack. All right, traders, so now I am back with you live and just going to show you, just go over it real quick, because now you could see where the market came to, right down to the support and resistance level. The market loves to do that. So you could see our entry here, that red arrow, and our exit here at the blue arrow. Now when I woke up in the morning, this level pretty much was looked like a little rejection candle. Actually, it looked like a little indecision candle. So I placed my stop loss all the way down here because I wanted to give this a chance to break this range, and it didn't break. So I had my stop loss very tight up against this level, and I took out 110 pips basically. So it was a 110 pip trade just from support and resistance, and just looking at the price action and looking at setups here, and the market came right down to the level. The market likes to move to and fro, support and resistance levels. That's why I always say you could do very well just trading support and resistance levels and price action. If you just really take time to learn it and understand it, you could really do well. You don't need any other indicators or anything. But in my case, I was using some divergence. Really would have thought this market could have broke this, because you see the OBV with the negative volume, but that's down volume, and we would have thought the market might get through there, just as we did here, where we thought it was going to go back up to the upside. But what we did, we still, even though this was the candle that came down to this level, we had our stop loss here. So the last video I showed you, I had my stop loss above this candle. Well, this candle never went any higher, therefore it allowed me to stay in the trade, and it dropped lower. Didn't quite hit this level, and I didn't have an target set here. And when I woke up in the morning, luckily I woke up when I did, because when I took the profit, next thing you know, this thing started going up like crazy, and it ended up here. All right, but we got the profit way down here because the candle was a small indecision candle, put my stop loss quite a little bit above it. Then the market triggered me, stopped me out right there, 410 pip profit. And that was the trade. All right, so basically guys, that was just a support and resistance trade, not using Ichimoku because you can't always use Ichimoku. I mean, Ichimoku was sloppy here because this was pretty much a range on the daily time frame. Now 4 hour, it doesn't look too bad, and that's why I like to go. So what I did was basically just look at that daily time frame. I always look at my daily, then I figure out the bias, and then I figure out how to get in on a smaller time frame like the 4 hour. So I got in on the 4 hour time frame, just seeing this indecision candle here, and then the market broke that level and then triggered us in. Thought we might get here, took us lower, stayed in the trade, and then finally got to our final target. We knew this would be probably the final target because we're inside that range. It would have been great if it would have broke it, because then we could have put our stop loss all the way down here and just let the market run, but that didn't happen. But we still did pretty well. So just wanted to run that through you, show you the trade from the beginning to the end. Really a basic, simple trade right there, nothing much about that, but I really like to keep most of my trades basic and simple. So basically this concept that I just showed you is what I do for all my trades, the same concept. All right, but it's just a different level, different area, different spot on the chart depending on what I'm using. So I could be using Ichimoku if I was using pivot points, if I was using Fibonacci retracement levels, if I'm using horizontal support and resistance, Tenkan-sen, Kijun-sen, and so forth. Just doing the same thing, but different signals, but still the same kind of trading. All right, so that's support and resistance trading in a nutshell. Hopefully you liked that, hopefully you enjoyed it, and hopefully some of you guys caught the trade when I posted it on YouTube. If you caught it, very good. If not, sorry, we'll be posting some more as they develop. All right, so until next time, traders, have a great one. God bless. So long.